One of the primary themes that runs through the DTVB system is the understanding that the greater the amount of supporting evidence or good conditions will dictate the type of gap up that you get, or the type of strength in the movement that you will get. And so when we do find an opportunity, we always look for that additional information. This video is about 6 specific stocks that I have taken. Each one is a gap up situation, and each one has a number of situations or patterns that repeat themselves that are outside of the normal pattern. Let me rephrase that, or let me clarify that. When we find gaps, we need to have the conditions met within 3 patterns: the identical indicator pattern, the down touch patterns. Now, these are for gaps up in this particular video, and the proximity group patterns, which fall in location patterns and shape patterns. The identical indicator patterns, we have 12 or more identical indicators. Like, for example, if you had 14 identical indicators that were in a TOC lower pattern, that would qualify, because we have a majority of the identical indicators. In this case, we need 12, but we've got 14. By the way, I use 12 as a primary condition, but gaps will appear in much less than 12. It's just that it's really nice if you can get 12. Should you have 9 and 1, like 9 TOC patterns and 6 right leg W patterns, right leg W higher patterns, you would then have 15 identical indicators in a 2 pattern group. And so we have 1 patterns, 2 patterns, and even 3 patterns in identical patterns that will form the conditions, will qualify them as good conditions for the identical indicator group. Those and then, as supporting evidence, we may get another pattern that is not one of those main patterns: the identical indicator pattern, the 1 pattern, the 2 pattern, or the 3 pattern. And those would be like Zip Zion, highest or lowest, because in this particular example, 4 out of the 6 gaps up have Zip Zion highest. One of them has Zip Zion lowest, and the other one is in the middle in a low angle down situation. But that Zip Zion is a pattern, and because it's a pattern, it gives the movement more clout, and identifies identifies the fact that it could gap up. And other patterns can be like red peaks or red spikes, depending on which direction you're going. And so the amount of supporting evidence, those little things that we see, they can be divergence, like swing pink up, and I will emphasize up because swing pink is a leading indicator, and it usually tells us direction much faster than others, and swing Zion down, 2 indicators that are divergent. They're very important indicators because swing Zion is a price barometer, along with Zip Pink and the 3 price lines, making a total of 5 price barometers in the chart. In the downtrend, category of the second pattern that we have to have, there are 6 what we refer to as down touches. And that's trend red, green, and gray can down touch the 3 7 short-term trend lines, which are the yellow, pink, and blue, or the 3 fast lines, trend green and gray, can down touch 0, or they can down touch under 0, or they can, what we refer to it as a down touch, but they can do a sky touch, meaning the trend red and green are going up for 1, 2, 3, 4 days, and we only use 4 days. We use the crossover day where trend red crosses over green plus 3 more. So there's 4 total days, and oftentimes on one of those days, a lot of times it can be the crossover day. You have the crossover day, and then the day after it gaps up. That's what I'm trying to say. And so you have many different things that can happen, but you have to have one of those down touches in the trend chart in order to qualify as a good condition for the gap up next day. If you don't have a down touch, one of those 6, and by the way, the 5th one where you down touch under 0, it doesn't down touch any line, or it just is an area under 0, and it can be just barely under 0, or it can be 15 points under 0. Even I've seen it a little high, or a little more than that, closer to 20 points under 0. So it really can go down far depending on how far they push the price that day. And so, but the key is the crossover day, when trend red crosses under 0, the next day it goes up. That is the signal. The crossover day, trend red crossing under 0, that is that cross under day is the signal for the next day going up. The third group is the proximity pattern group. And by proximity pattern, what we mean is the power chart. And we're talking about the power 4, which is the pink, blue, white, and yellow. And if you take the yellow out, you have the power 3. If you add Zion to the power 4, you have the power 5. And if you add red to the power 5, you have the power 6. And so the indicators by group, either power 4 or power 5, can be all above the power orange line or all under the power orange line. Power Zion can be under the orange, and the power 4 can be above the orange. Power Zion can be under the orange, and the power 3 can be above the orange, making yellow under the orange with the power Zion. So there's group areas, meaning locations where the power groups sit at the point that gaps occur. And so they're called locations. So it's just a matter of kind of identifying where they can be. And then there's shapes. Like, for example, there's 3 days up, or there's a down, up, up pattern, which is basically what we refer to as a 2-day BOC pattern. It goes down 1 day and up 2 days. Or it can be a plain BOC, a plain TOC, or a TOC 2-day, which is up, down, down. And so, not to confuse the issue, but these are shapes. You can have high M patterns. Most of the time when we talk about a high M pattern, we end up talking about a BOC pattern. And of course, you have right leg W higher patterns. And so any of these shapes can work, and depending on the location they're in. Then they make good conditions for gaps. When Zion is under power orange and the other group is above power orange, that situation is considered to be divergent. When Zion is separated, when power orange is between Zion and the other group. And then, of course, there's just a whole realm of different types of divergence, from single line divergence to two indicator divergent, pairs divergence, like pink and blue are up and white and yellow are down. Remember, power pink is your short term or your short deep cycle indicator. Swing gray is your big primary deep cycle indicator. Now, all that being said, I want to get into showing you these differences, and primarily what I'm going to be doing is showing you supporting evidence based on what is happening within the movement the day before the gap occurs. And as you know, this is when we say we can find gaps before the gap occurs, this is what we're talking about. And so if I mention something on the video, it's important, or it's a viable condition or a piece of supporting evidence that is contributing to the movement. Now, on this one right here, we have a gap up that looks like it went from about $43 to $52 in one day. And it happened just a couple of days ago. And right now, this is July 19th, 2017. The first thing I'm going to show you down here is in the power chart. And first I'll mention that Zip Zion is lowest right here at 58. And that's a contributing factor to a gap up. Think about it, gaps, you have a situation where the other indicator lines have gone up ahead of the Zip Zion line because Zip Zion is slower, so now it's going to catch up. But think about the inverse of that. You got Zip Zion highest in 4 of these 6 examples that I'm going to show you. And what has happened is Zip Zion has remained highest, and in some cases it goes up, in some cases it's down, but it's still highest, indicating that there are people in the stock. There are how do I say this? Obviously, in the case of the line of Zip Zion going up, there are more people buying the stock. But if they're going down and the line is still highest, there are still more people in the stock than the indicators identify the direction of the value of the stock going. And as a result, those indicators are going down and under Zip Zion. Power yellow is crossing over right down in here. If you see this, power yellow is crossed over the power orange line. And at this point, then, on the vertical green line day, we have the power 6 all above the power orange line. And at this point, all of these are in a 3-day up pattern. And by that I mean, with the exception of the power Zion. Power Zion looks like it went down and then up for 2 days, so it would be in a BOC pattern. Otherwise, all of the rest are in a 3-day up pattern. Power red looks like you can see a bottle nose to it in this particular movement. And in fact, the red is up above 3. That's another strong indication about gaps up. When power red is probably above 2.5 or so, then it's real easy for it to gap up. Zip Pink is in a high crescent move at 96.8. And there's two ways that we typically see Zip Pink. It's in a crescent move like this, which just continues to build and build and go up and up. And then the other way is just to have a spike up pink red point, and then it goes back down. Because most of the time when you see a Zip Pink, it goes down. The swing gray color, swing gray line down here. I'll point this out as long as I'm over here. If you look at this, swing gray has crossed over swing red, and it has also crossed over 0. And if you've possibly heard other videos in me talking about the swing gray line, it's our deep cycle indicator, but it really makes strong movements when it crosses over 0 or crosses under 0. And in this case right here on the green vertical line day, swing gray is 0.01. So it's just made it over the 0 line, and then next day you get the gap. The trend red in here, right in here, is highest, is in a sky touch move with trend gray highest. And this movement, we basically treat this movement because, remember, we have a crossover movement, and then we have, we like to see the crossover movement, meaning that red has crossed over green. When, in this case here, trend red has gone down 2 days, almost touched the green, and so it's at this point that we will look at the trend red. We consider it a cross up because it came down, rather than, if it would have been up all the way, then we would have discounted this. But obviously the gap occurred, and so this idea ends up qualifying for what I'm talking about, meaning that trend red has a down up pattern. So we would identify trend red as a BOC 2-day pattern. And we would treat it as though 2 days ago, so on this day right here, 2 days before the green vertical line, we would consider that day to be the crossover green line, quote unquote, technically. But again, we would have, we have scans all set up based on crossovers, so we would never pick up this particular movement in our scan. We'd certainly pick it up in other way, or could pick it up in other ways, but we don't necessarily would see it under a trend red crossover green scan, because we have the crossover swing gray crossover 0 scan. We have Zip Zion lowest scans. We have all kinds of them. But the point I'm trying to make is we wouldn't pick it up on that particular scan. Now, in this particular situation, Zip Green is at 71. Zip Blue is above Swing Red, back down in here, which means the start of an uptrend. Remember, Swing Blue is our crossover indicator. When Swing Blue crosses over red, you're starting an uptrend. And it has Swing Blue right here is at minus 0.05, and Swing Red is at minus 0.05. I guess they're exactly touching one another. And so we again, we all know when lines are equal, you can use the whichever way the line could go, you can use it to your benefit for qualifying for the situation that you're in. So in this particular case, we would quote unquote say that blue crossed over red, even though it's equal to it, because you can use it either way when you have two indicators that are equal. The swing yellow is above swing red as that is not as important as some issues, but we do like to see that. But I will say this: swing yellow is above swing red in every single pattern that we are going to look at in this video. So those are the basic ideas behind what we have in our trend chart. We have, like I mentioned, we have the Sky Touch, and we also have gray highest, and gray highest is pretty important. Now, going on to the next one, we have a trend red BOC pattern that is higher, and it's a crossover, and it crossed over 0 at the same time. There is a lot of power on the vertical green line that we can identify with. Let me say that again. You've got a BOC higher pattern in trend red. You have a crossover 0 in trend red. It also crossed over the trio lines, and it's a BOC pattern that did the crossover. And obviously we're in what we refer to again as a Sky Touch. And in the power proximity group patterns, we have the power yellow that's crossed over the power orange. And so that then puts all of your indicators on the vertical green line day above the power orange. So this is a power 6 above the power orange line location pattern. And with that, we also have Zip Zion highest at 82. We have, I'm going to say we have a double situation there, highest, because Zip Zion is at 82.04 and Zip Pink is at 82.55. So they're almost like they're identical, but technically Zip Pink is a hair higher than Zip Zion. But because they're so close, we just basically count both of them as highest. Trend red, like I mentioned, is that crossover green in the BOC higher pattern, and we have divergence. The trend red is in a high M higher pattern, or if you want to think of it as a BOC pattern. I just wanted to clarify that because some would look at this as a high M higher pattern. And power red in this particular case has just crossed over 0 and it's at 49, but power red is highest. Zip green is at 77. Whenever you get the 3 days up, or when you get a BOC pattern, you oftentimes will get Zip green above 0 somewhere. On the first situation example, Zip green was at 71. On this example, Zip green's at 77. As I mentioned here before, Zip gray is if you look here closely, you can see that Zip gray is just under going up over swing gray has crossed over green. And so whenever it crosses over a heavy line, that's one strong indication. It has not crossed over the red or the 0 line, which we normally like to see. Obviously, it does the next day, and you can see the tremendous gap we get. But swing blue is over the red, which means an uptrend. And just for emphasis sake again, trend red is highest in that Sky Touch, and swing yellow is above the swing red that I mentioned earlier. They're all in that particular position. Now, in the next example here, this is an example where we're in a trend red BOC higher pattern, and we have well, first of all, let me back up. I want to do this. I want to start this with the ZIP Zion highest. It's low, it's down, but ZIP Zion is highest at 38. And trend green is also in a oh, excuse me, I'm reading this wrong. In this example here, we also have big three divergent. I said that wrong. I misread it. Trend gray is highest, not trend green. And that's a, again, we like to see trend gray highest for gaps up. And power red and trend red are up, whereas swing Zion is down. And I should move this so you can see this properly. And so this is divergence in the big three. Both reds are basically become leading indicators in this case because we do have a red candle and we do have the lines moving up on trend red and power red. And then power Zion is up 3 days, and power pink is down 3 days. And so no, I'm reading that wrong. I meant power Zion, excuse me, power, we have a pink green bottom, okay, and we have ZIP green at the 0 mark. Now, as we know, when we have one of the signals for a ZIP green pattern on the bottom to end is when red, gray, yellow, and blue go up. And that has happened here. All 4 of those lines are up. But notice that the ZIP pink is above the yellow and blue line, so it's remained high. Remember, it's a price indicator. It didn't drop down to right next to green in this case. ZIP pink is at 9.8 right now, and this is one, I mean, I think I've mentioned on other videos that I think about 10% of the time the basic rule for a pink green bottom in which ZIP green is at 0, pink is right next to it and going down. Well, it is going down, but it's not right next to it. Blue and yellow are in between it. So that's one of those exceptions. But power yellow is lowest in this example here. I'll move those so you can see that. And we also, one thing I want to point out here is because this is basically associated with the difference. I use a capital letters on it, DIFF, and I refer to it as the examples for I look at it as in a format of divergence. But basically what you have here, on the day before the green vertical line, ZIP red was at 7. The day of the green vertical line, ZIP red was at 35. Now, keep in mind, today the closing was $5.13. Yesterday the closing was $5.15. So the price went down 2 cents, but ZIP red went up to 35. And if you're thinking about this, basically it went up 5 times. 7 times 5 is 35. So ZIP red went up 5 times its own value while the price went down 2 cents. And so that's a clear example of price divergence, but it shows us the power of of identifying what happens the next day when you have strong movements out of zip red, because zip red is the fastest moving line that we have on the system. Swing pink is probably the second fastest. Zip gray is right in there with those two. But the obvious situation is that a difference in the line length can make a difference in the identification of the strength of the movement that's coming up. I mean, it's just really obvious what's happening there. And so in that particular situation, we have divergence between, and this is where I was a few minutes ago. Power Zion is up 3 days right here, and power yellow is down 3 days. And so that's power pink, I guess, is more important from the perspective that power pink is our deep cycle indicator. And so power Zion's going up, power pink is going down 3 days in a row. And that is extremely unusual to have 3 days of divergence, and then, well, you get the result that you get. It gaps up in a tremendous, it looks like it gapped up close to $1 on a $5 stock. So again, trend red has crossed over trend green, and swing yellow over here is above swing red. Again, that happens quite a bit. In the next example I'm going to identify or show you is with the power 6 above the power orange. Zip Zion again is highest. Zip green is at 13, even though zip green and zip Zion are in divergence. I want to just go through. This one here has a number of indicators that are divergent. We have the swing Zion that is down and the swing pink that's up. We have the price red that crossed over and went under the price green. That's divergent, and that happens often, or I won't say often. It happens a reasonable amount of time to take note of it. Put it that way. When things do cross over, it makes the difference. Obviously, you have to have supporting evidence with it. It doesn't work just by itself. Okay? So I know it's a factor. It's kind of hard to put a handle on it. I mean, you can look at this one right back here. Price red crosses under price green, and we got, squat for price movement. Doesn't fit. So it's like when red crosses under green, something is going to happen, but you have to have the supporting evidence to go along with it. And the best supporting evidence for that is other types of divergence. And I suspect if we look back here again at 2 days before, I haven't even checked it out, but I can see a swing or a zip blue and yellow is in divergence, but there may not be much more than that. So the next divergence is power yellow is up over here, and the power 3 is down. That's the pink, the blue, and the white. And with that in mind, we also have the trend gray up and the other two down. This is a real classic. Trend gray highest, trend gray up and the other two down are a classic condition for a gap up within the trend chart there. Zip red down, zip gray up over here in the zip chart, and zip blue is at 72 and zip yellow is at 45. And so there's a 27-point difference, and that is divergence. Again, the basically zip blue and yellow run together. They're a pair, and when they do separate this like this, when they separate, price typically moves apart. When they come back together, price typically moves significantly. That separation is a contributing factor or a piece of supporting evidence. Usually when this happens, we see it's spread out in over 2 or 3 candles, not in a gap situation. But I do know that it's part of what's going on in this particular example. Trend red has down touched trend pink, and it is also in a bottlenose pattern. Remember, or don't not remember, but you may have heard me say or talk about dual patterns within one movement. Here we have trend red in a bottlenose pattern that says it's going to go up the next day, and it is down touching trend pink. So it's a 2-pattern movement with one line, and that we call that a double. Some people, or sometimes will refer to it as a dual movement. But in any case, trend green has down touched trend blue. Zip pink over here is in a down touch 50. It's at 51, and so it's down touching the 50. And then power yellow is lowest. And when I say lowest, I'm talking about power yellow being lowest of the big, or of the power 4. And then power red is at 1.6, and that's nothing out of the ordinary, being at 1.6. And then again, I want to emphasize trend red is highest. And on the following example, here we have the trend red is in a well, first of all, let me deal with this. Trend red is in a TOC lower pattern. Swing Zion over here, Zip Zion over here, you can't see it with all the lines there, but Zip Zion is actually highest at 18. And so that, as I said to you before, Zip Zion is highest in 4 out of these 6 examples. And that's one of the key pieces of supporting evidence. We don't, we think we know why that happens, but, I guess we're open to other people telling us the reason, but it is important that it's there. And when you find Zip Zion highest, and you can find, if you just run a scan on Zip Zion highest, you're going to run into opportunities like this. And so the Zip pink is high. It is above the yellow, blue, red, and Zion lines. Zip green is at 0 for the second day. And in this particular example, we have 17 TOC lower patterns at the bottom of a cycle. Now that's a divergent move that's a series of 17 indicators being divergent. I pointed out in some of the examples before, I had 5 or 6 divergent situations. We technically have a TOC pattern, a top of a cycle pattern, at the bottom of a cycle, which basically is a case in which the bears pushed the price way too far down, and the reaction was to go back up. And in this case here, it really gapped up. And swing, the one thing I want to point out to you here, amazingly, look at swing red. Swing red is a heavy line. Swing red is in a TOC lower pattern. So we don't count it as one of the 22 market force recognition indicators, but there's an 18th indicator in a swing or in a TOC lower pattern. Zip red goes from 87 yesterday before the green vertical line to 8 today. So it's almost 80 points it drops down, and that's a case of divergence. How do I say this? It's a case of recognizing a significant. Now, this is not going to be as easy to see because you're going to look at this red candle up here on the vertical green line day and say, yeah, it's going down. And you're going to look at red and you're going to say, well, it dropped 80 points. That's normal. And that's hard to argue because of the size of that candle. It's a pretty good, size candle in that particular stock. But as a result of that, Zip red is also in a TOC pattern. And again, it's at 8. Zip, you can't see it. Actually, Zip red is at 8.3 and Zip gray is at 8.0. This is what we refer to as Zip gray in a pinpoint, or sticking its nose out move. When we have a spike down or a spike up in which gray is higher, that increases the odds of a reversal pattern. And in this case here, like I say, gray is at 8 and red is at 8.3. And so with gray lower than red, there's just an increased opportunity for an uptrend movement. And that particular piece of information is obviously supporting evidence. It's not necessarily a pattern. It's really close to being qualified as a pattern because of what we know about it, but it's just a real strong piece of supporting evidence. And then note also, look at Zip gray the day before the green vertical line. Zip red is at 87, Zip gray is at 50. So there is a 37-point spread. Why didn't Zip gray follow Zip red when it went up? Zip gray hits 50, right on 50, reversing back down the next day. That's a huge separation. And just like when Zip gray goes real high over, when it just goes a little over the red and that goes back down, the same is true when it only moves a little bit. When you have a big separation, like in this case 37 points, that's a real strong indication that it's going to go down the next day, and it does on the green vertical line. Trend red, as I mentioned, was in a TOC lower pattern, and power pink we consider as lowest. It is also in a TOC lower pattern, and again we exclude power red because power red is just geared to be either on the top or the bottom when it is in either under or zero. So when we think of power pink, we do not look at the power red. We exclude the power red when we make a determination that is power pink lowest or highest. And then also we have power yellow highest in this situation, and that again is an important factor in, even though it's underneath the power orange line, it still remains highest, and that's important. Power red is at -5. It's way down there, and then amazingly in that gap it goes way over zero and everything else. Trend red is highest. All three are going down, but trend red is still highest. And then we have 4 bottle noses. Swing blue, trend green, and power blue and white. And so you can see the trend green, you can see the power, maybe you can't see it too well, but you can see the blue is in a low angle down, the white is right on the orange and low angle down. And then I hadn't pointed this out to you before, but swing blue is in a low angle down. And of course, the other one, the other bottle nose, which is really powerful and is actually a fifth, and that is swing gray in a bottle nose pattern. And that again, because swing gray is so slow to move, and then for it to cross under zero, go into a bottlenose pattern, I mean, you got to really trust yourself to, I mean, your first reaction is, I can't believe that stock would go the other direction next day. But you got to learn to trust the indicators, and you won't be able to do that until you see them do it time after time after time after time. And that's the power of working with the system repeatedly. It's the procedures power that we talk about. When you analyze new opportunities every day and you become familiar with how the indicators work in relation to the price. So it's just amazing. The last one that I'm going to go over here is a power 5 all above power orange and under zero. I did one of these earlier, but it was over zero. I'm going to identify the divergence to you at first. The obvious one is trend red is in a TOC higher pattern, and power red, which you can't see yet, power red is in a TOC lower pattern. And so keep in mind, remember, power red and trend red divergent moves are my favorite. They're really strong. In this case here, we have a TOC, one's higher and the other one's lower. You'll get right leg W higher, right leg W lowers. You'll get BOCs, high M's, whatever you want to call it. There's a BOC 2-day, TOC 2-day, and going both ways, you know, up, down, down, and up, up, down. So you can have both formulas for a 2-day TOC or a 2-day BOC pattern. Zip red over here is down, zip gray is up, zip green is up, and zip Zion is down. Swing Zion is down, and swing pink is up. And that happens just a huge amount of time, where in gaps up, that swing Zion, swing Zion is down and swing pink is up. And then, let me bring this up here a little bit, and then power Zion is in a, I got to bring it up here so you can see it. Power Zion is in a TOC lower pattern, and power pink is in a TOC higher pattern. Trend red is down, trend red is down and trend gray is up. And I used to think that the trend red and green divergence was really important, but I've learned that the trend red and trend gray divergence issues are more important. Zip green is only at 49. Power yellow is in between, so it's not. That's one of the cases where it's not. Swing yellow, of course, is above red. Swing red green again. I forget to move these when I move from symbol to symbol. The power red is at -4 on the vertical green line day. And again, for emphasis, trend red is highest. Now, let me just summarize a little bit. I've got a few notes here that I want to do, and all I'm going to do is I'm going to read them off. And that is, trend gray is highest 5 out of 6 times. Down touch, and at the other time it down touched the pink. And obviously, when trend gray down touches the pink, the reaction is next day up because it's a reversal pattern. The entire DTVB system is a reversal recognition identification system. We pick the cycle tops and we pick the cycle bottoms, and this video is obviously an example of how we can pick gaps before the gap occurs. Power yellow is a crossover power orange in 2 of the examples. Power yellow is lowest in 2, and power yellow is highest in 1. Swing yellow is above swing red in all 6 examples. Swing red is under 0 in 5 out of the 6. Trend red is in a sky touch pattern twice, and then in a TOC lower, TOC higher, crossover trend green once, and down touch pink once. So the trend red examples had a variety of down touch. I mean, five out of the 6 were identified there. And then, of course, price red crossed under price green, but it was only, now think of that, this is the example, think that where I identified price red being highest on the left peak and lowest on when it went down. That happened in only 2 out of the 6 situations. So this is an excellent example. I concentrated on like using the power 4s, 5s, and 6s. There's going to be other videos that I do on power 3s and 4s again. I want to have several varieties. I've done them one at a time, but I wanted to just put a bunch of them together so you could quickly see the location patterns, what shapes the particular patterns we're in. When you get the power 4 in divergent patterns, like the last one we looked at, where power Zion was in a TOC lower and power pink was in a TOC higher. When those 2 paired lines are divergent within the power 4, that's strong information. And also there was power yellow in between green and orange on one of the examples. Sometimes power Zion will be between the orange, power orange and green, for 2 days. It goes down and then it does a low angle, usually up, and as a result, it is a gap up. So lots of information. It was, in my mind, an excellent opportunity to identify supporting evidence for gaps and just the level of evidence that we found. Remember, we have 2 basic types of methods to identify the strength in a market movement, and those are the day before or sometimes a few days before, because divergence can occur the next day, or it can occur 1 or 2 days later. The reaction to divergence, I mean. And so that is important to identify. When we talk about line length strength, you typically have things like one of those examples we had was 17 TOC lower patterns at the bottom of a cycle. Now that price just got pushed so far down, too far down, the reaction was just a really strong pushback. But the long line indicator length, or the long line length of the indicator, 17 of them, gave us the information for the next day's reaction. And so that power we see in strength. The other types of the other type of power that we can see is like when Zip Red jumps 35 points from 7, it jumps 5 times its value, and the price goes down 2 cents. That's real powerful. That tells you that something's going to happen the next day. And so there's different types of line length examples to identify strength. And strength is not only I picked up in the day of the movement. For example, when we had those 17 TOC lower patterns, that red candle was pretty strong. It got pushed down quite a ways. And on that day, we saw the indicator line length being longer, and it pushed it down. But next day, we also know what can happen. And then the following day, it fits into divergent strength, in a divergent strength reaction to what had happened the day before. So the many different types of line length strength examples, but only 2 types of strength power: line length and divergence. And there's just way too many examples of divergence. I personally really like the divergence between the big 3, specifically Trend Red and Power Red. And I think I've mentioned that on a few other videos. But when those two have divergence, you usually get something pretty strong the following day. So I hope this was informative. I know that that anybody that's working with gaps would really like to see other videos like this, and I can assure you they're there. I mean, there's dozens and dozens of them individually made, but I'm going to make a few more in groups. So enjoy your time trading. I've said it before, have fun when you trade. If it's a chore, I didn't like trading when I was losing. In 2007, I wasn't happy. But I learned and it took quite a while to figure all of this stuff out. But we don't know of anybody out there that's trading gaps before the gap.